Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about the 600-point sell-off yesterday, Palo Alto network earnings, and the new APE shares from AMC. Before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The stock market futures are in the green this morning after a huge sell-off on Monday. Has the bleeding stopped for the week?
Well, I hope so. It's probably the best answer I can give you. Good morning, everybody. Good morning, Allison. Thanks for that intro. 600 points yesterday, had a huge sell-off on Friday. So all told, that's like 3-4% sell-off in just a couple days. So generally, after a significant move up or down like that, the market takes a breather. And that's what you're seeing here. We're a little over half an hour before the market opened, really basically flat. So you can see it's the worst day since June. That's not much of a headline, right? June wasn't that long ago, but certainly June was kind of the painful sell-off that led to that nice July move. So let's take a look at where we are in the bigger picture. If you're into technicals, it's kind of a beautiful technical setup. I'm not really going to cover that today, but if you get into moving averages and stuff, you'll see an interesting story, and that story is that this level is going to hold. So we covered yesterday these big, the sell-offs and then the subsequent rise. So this is a 6-week move up. Now we've had a couple week sell-off here, down just below 13,000 on the Nasdaq. So what we talked about yesterday is you have the Jackson Hole meeting Friday. That's when Chairman Powell is going to speak next, and I think he's going to blatantly just tell us what the next rate hike is likely going to be. When you look at the last four, it's 25 basis points, 50 basis points, 75 basis points, 75 basis points. I think everybody in the financial world is expecting 50, which means that we're showing that we're past now a peak rate hike, which means we're past peak inflation. So we're on the road to recovery. I think all of that is a good sign. Now, if he comes back on Friday and says 75 basis points is back on the table, then I do think we go lower from here, because that means we aren't making any progress with the rate hikes. So am I comfortable putting money to work here? Yes, I think the market will be flat to selling off slightly into Friday morning. But if he says what we expect Friday morning, you're going to wish that you put money to work this week.
Next, Palo Alto Networks has a beautiful earnings release last night. Is the stock a buy, sell, or hold?
Well, it kind of depends on your situation, but certainly I think everything about it is a buy across the board, not knowing your situation, right? But I have some of this myself. Also, I'm heavy into the ETF fund cyber. I think that the overall thesis of cybersecurity is that it's going to be around forever. If you follow the data is the new oil, well, cyber is is absolutely imperative for small firms like myself. I have to pay for cybersecurity insurance. I have to pay for all the data protection. And if I have to do that as a 5 to 6 person shop, everybody out there is having to pay for this protection, of course. So you get into best of breed. Is Palo Alto Networks best of breed? I think so. They've proven it this time. They beat our both top and bottom line, so revenue and earnings. They also bolstered their forward guidance. So really everything to like here about Palo Alto. And when you look at where the stock's been, that's kind of a tough chart. So let's go over to the chart that we're used to here. If I might be able to click on it. Yep, it's up 10% this morning based off of the news. Let's go to the 1-year chart, because that's what we're looking at. So it hasn't sold. It was over here at 626, went all the way down to 440. So that's that 33% move that basically most of tech saw, and now it's on its way back. A couple of fits and starts along the way, but now that it's up here at 561, or let's see, where is it? Yeah, 562-ish. I think this holds in here, and then it's only going to go higher. When you go into PE ratios and traditional valuation, they are losing money. They're growing as fast as they can, so that can scare some folks away. But I do want to highlight that right now they're at a negative PE, and their next quarter is supposed to be a positive PE. That means they're going from unprofitable to profitable. That is one of the best times to buy into a company is when they're making that transition. Now they have to make it. If their next quarter they miss and they're still unprofitable, then that's going to hurt. but everything out there is pointing in the right direction for Palo Alto Networks. If you have some, you can buy more. Obviously, the share price is difficult there for a lot of folks, but if you don't have any, consider adding some to your portfolio.
Last, AMC just announced new APE shares. Any reason to own these?
Not really. You can conclude the show with that. Just kidding. I'll offer a little more insight, but there's really no reason to own these shares. This is financial engineering at its best, and it's also making a mockery of the system. So if you followed back to the meme stocks, AMC was, kind of the OG in the group here that, started the whole thing, ran up huge. Bunch of people made money, bunch of people lost money, Diamond Hands went on, Roaring Kitty, all of that Reddit stuff. If you partook in that, if that's a word, I hope you enjoyed yourself. Maybe you made some money. There was a lot of money made and a lot of money lost, but it's really just exchanging hands. And none of it has to do anything with investing. So what did they do? Well, in true AMC fashion, their following are called apes because, they're supposedly dumb. That's why they call themselves apes, and they hold it no matter what. Well, these AMC now has a special share class called APE, which is supposed to trade right around the valuation of AMC. I don't know. I think you should just stay clear of this. They're authorized to issue up to 4.5 billion additional shares to raise cash. I don't know. I would sit back and ask yourself this: is of all the things where I want to invest right now, is traditional movie theaters the place to put my cash? Not my cash, not my client's cash. This is like getting in on Blockbuster right before they went bankrupt, right? There's just really no upside in my opinion. I love going to the movies. I think it's great for family fun time, but it's significantly more expensive than sitting there staying at home. And of course, if you're eating along with it or getting snacks or whatever, that's where they get you, right? There's times I'll happily pay that just for the experience. But really, if it's a recession that we're in and people are, tightening down on expenditures, cutting out the movie is, a no-brainer, right? Just buy it on Netflix or stream it on whatever, for most movies either release simultaneously or are out in short order, except for very few. So I don't know. I would not put any money behind AMC or the new APE shares unless you just are bored and you want to do some gambling. You could go in there, and if you did, I would say take it short, right? I think it's all going to zero. I think there won't be an AMC as we know it in a year, maybe 2 years.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.